Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. We're going to go through Twitter, see what people are talking about on Twitter, social media. It's going to be financial topics, wealth building topics, and or commodity related topics because I think that's where the value's at over this next secular bull market in commodities over the next decade. So let's dive in here. Let's take a look and see what people are talking about. It's at finding_finance if you want to follow me. And we've got a discount going on for finding-value.com. It's Turkey. Turkey is the discount code. You can see the discounts in the description link below. Scrolling down, do you agree with Wall Street Journal here? While all inflation feels bad, housing inflation is the worst. I don't agree because a lot of the people that I know, we own, well, technically we own our house, we have a mortgage against it, and our inflation from housing is nothing. So it's not the worst inflation because I have zero inflation to me from housing. Now, if you're a renter, then yeah, you're going to get hit pretty bad with rent inflation. But one of the things when I was setting up my life is I wanted to lock in my costs as much as I could, and that's the only thing I could really lock in that was a big cost. Uh, for me, the biggest inflation in my life is food. Food inflation, because I've got a family and they're getting older and they eat more as they get older. My costs are going up dramatically from food. So that is where the worst inflation comes from is food for me. So that's what I think. The hyperinflation of 1920s Germany is one of the most discussed cases where the central bank printed everything the government wanted. The result was soaring prices, 200 billion marks for a loaf of bread, and the food shortages, widespread violence, and civil unrest that followed. So central banks exist to create inflation as much as the people will tolerate. What do I think about this? You know, in the 1920s, you know what asset outperformed the best? Platinum. Platinum was 5 times the cost of gold, and gold outperformed silver in that hyperinflationary environment. Is that going to occur again worldwide? I don't know, but I'm sure ready for it if that were to occur. I think having an array of gold, platinum, and silver are all great if you're looking at potential investments for an outcome like that. And obviously, you want the things that you need and have a stockpile of those things if you can. On back. Mentions he missed the uranium run, then tells members confidently to sell their uranium stocks because it's over. Don't be like this guy, not picking on Nicholas Santiago, but just be cognizant. Many people commenting on the uranium trade who haven't done the work don't understand it. And he's talking about sell uranium, run, and load up on copper. Now, is that the right call to be doing? I don't know. I mean, I look at some of these charts, guys, and we'll go to the uranium to copper ratio. Here's uranium to copper ratio. Show what this guy is talking about. Now, would I sell uranium to buy copper with a ratio chart that looks like this? I wouldn't. Me personally, I mean, this thing looks fantastic to move to the upside. I mean, it just broke a base. It's just gaining a bunch of momentum. I probably wouldn't sell it if it were me. I would stick with uranium. And if you were to look at the uranium companies, this is URA versus UX1. So this is the ETF versus the futures pricing. And we're here squeezing up on a breakout. So what happens is you get a breakout, boom, get a retest, and we've been kind of just squeezing here. I would not be selling the equities either. They're still incredibly cheap against uranium. I think this will break and move up probably multiple times for a very big bull market in uranium. So I would not be selling this at all. In fact, I would probably be going opposite of this guy. I would be buying uranium in some of the equities, in all honesty. But, maybe he's right. I'm not saying that he is 100% wrong, but I wouldn't be, me personally, I wouldn't be making that trade. I would be holding on to my uranium shares. Now, copper's good. Copper's just getting a breakout. Um, it's starting to look good. It could be putting in a bottom. The companies are also starting to break out in a lot of them. So I understand the copper trade. I get it. But uranium also looks incredibly good. Now, here's the futures pricing. This is uranium from Casper. So I look at this. This is an inverted head, shoulder on a Renko chart. And we just broke out of the neckline. The projected move, $112. Now, if we're at 80 and we've got 112 and we're in the middle of this run, there's no way I would sell this. There's no way. I would let it ride. And if the equities start basically hitting it, I mean, the equities could move so far, so fast, with just money flows kind of rotating a little bit. I would not be selling. There's no way. There's no way at this venture. At this venture. This is Denison Mines. This is also an equity, a uranium equity on a Renko chart. And what do we have? We have a squeeze up. It's a double bottom. So it's a double bottom on the Renko. And we're about to break a downtrend line. Like, this is exactly where you buy, not sell. So, I don't know, guys. I could understand why people get very confused listening to people on YouTube, listening to all these different experts. Uh, I'm going to just tell you this. The most powerful you can get and the best decisions that you will be able to make are the ones where you don't want to stand with the herd. You don't want to rely your decisions based off of other quote experts. My biggest gains come from doing exactly what I'm doing right in front of you. Looking at the patterns, seeing how these things are breaking, looking at the fundamentals of the sectors, and then creating my own opinions on it. That's where my money has dwarfed. My returns have dwarfed taking that approach. Anything else that I've adopted in history. So would I sell something like Denison here? It's just getting started. There's no way. I would be, if anything, I'd be accumulating it, not selling it. But that's me. Take it for what it is. Uh, Retire early guy. I wanted to go over this. I thought it was kind of cool. So he left his last job, cost him $200,000 in lost bonuses, probably millions in the long run. Parts of my bonuses were deferred. By resigning, I had to leave serious money on the table. But that didn't stop me. At age 36, I said, screw it, I've had enough. Now, here's another comment I want to make real quick. When you turn like 30, mid 30s, at least this occurred with me, I really did not like working a 9 to 5. That's where I was like, I don't think this is based off merit. There's a bunch of things, and that hit me pretty hard early 30s. I want 100% to own my time, freedom, and be able to watch my son grow up in peace without distractions or undue stress. 4.5 years later, I'm still standing. I learned a lot about myself, my relationship to money, and what it means to lead a fulfilling life. Here are 6 lessons learned that may help you as well. You see where you're heading isn't for you, change paths. A big motivation is to leave my highly paid job was looking at my bosses who were 15 to 25 years older than me. On the surface, they had a great life, second home, luxury cars, fancy vacations, impressive lifestyles to most of us. The more time I spent with them, I realized there's a dark side to it all. Not only did many of them look haggard, unhealthy, drank a lot, and had poor relationships with their partners and kids, they were also still slaves to calendars, emails, meetings, and the need to be always switched on, always connected. Not even one of them was genuinely happy. Some were downright miserable, despite worth tens of millions of dollars. I quickly realized that I would end up just like them if I didn't change anything. So I did. I changed paths to avoid that kind of future for myself and never looked back. You know, one of the things that when I was going through my 9 to 5, I was looking around at the people that were above me, and I didn't want a single position in the entire company that was upward. And I was like, crap. And I think there's a thing in your head that says, why the hell are you there if there's no upward mobility? Like, why do I want, if I don't want any of the positions that are upward, why am I here? Now, I'm not saying that mine is exactly like his position here, but that's what I felt when I was working a 9 to 5. The magic window is real. Don't miss it. I've never had a 9 to 5 job as a dad. In fact, the first time my son saw me in a suit and tie for my wedding, he said, "Daddy, you look funny with a bib." So grateful that I'm with him 24/7 to be able to be there for the bath times, the bedtime stories, snuggles, playgrounds, tantrums, breakfast, etc. I'm able to be fully present with him, keenly aware that I'm living inside the famous magic window, a temporary time frame that will never come back. Before you know it, he will be a teenager and he won't need me as nearly as much as he does right now. I'm extremely grateful for being able to be with him and in that phase of his life. So showing up is 99% of the game. I suck at going viral. I have zero press about me or my endeavors. I don't have a Facebook account. I don't have a TikTok account. I don't have an Instagram account, and neither do I. But one thing I'm good is at showing up. It's the slow grind strategy where you see most of your peers drop out. Put yourself out there on a regular basis while adding value. Well, then good stuff happens to you just by staying in the game and not giving up. So look at the hypothetical fail, 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 gives up, and you've got successes. Keep trying. So, number 4, you're always going to worry about money. Money is a strange thing. No matter how much you have, you will still worry about it. I personally walked away from a high income 9 to 5 job with a lot of savings and investments. Yet, nothing can prepare you for the absence of a monthly paycheck and the almost guaranteed volatility of your net worth once you're exposed to income producing assets that change prices daily or monthly. No matter how much money you have, you still worry about the world economy, interest rates, inflation, and a chance of losing it all. The odds of it not being enough until retirement. Healthcare costs, education costs for your kids, how much to give to your kids, etc. It's part of life, accept it. And I'm in the same camp. I don't know how much money is enough to kind of break away from everything. So I think I'm okay. It feels okay. But again, I'm pretty young. And it's like, I got a long ways to go. So I know some people had asked me, do I sell assets off, cover expenses? What I do is I set up a dividend portfolio that pays me dividends, and I don't sell my assets off. If you want to know what I do, it's also easier to make money outside of a 9 to 5 than you think. The Lindy effect says that the longer an idea has been around, the longer it continues to be useful. Same applies to entrepreneurship. You show up, add value, act like a decent human and half a brain, and remain open for business, opportunities will find you. This has happened to me via the most surprising avenues: niche websites, ad arbitrage, ebooks, coaching, and now a premium membership club, retireearly.com. This didn't happen overnight, and not because I was looking specifically for these things. I just kept being open for business with new ideas I had. Because I had time, something you don't have with a highly paid 9 to 5, I can explore these ideas slowly over time. I'm sure I've only scratched the surface and there's much more to come over the next 5 years. So I agree with that. That's exactly my approach here. Same thing. I ditched the 9 to 5. I created a YouTube channel and just keep showing up and adding hopefully value to everybody who's listening. Knowing your own enough makes it all so crystal clear. On my 4-year anniversary, I looked at my peers who stated their jobs, and I found the following. Even the mediocre ones have doubled their net worth over that period. I look at my town and see people building brand new houses, eating out in expensive restaurants all the time. Others are getting 50% pay raises just by switching employers, with the juicy signing bonus to boot. I say to myself, wouldn't it be nice to do those things without worrying about money? Maybe I made a mistake retiring so early, but we have enough. Our house is enough. Our two cars are enough. Our education and healthcare standards are enough, et cetera, are all enough. And importantly, all of this enough comes with 100% time freedom. No bigger house, more expensive vacation, bigger salary at a 9 to 5 could possibly compensate me for the freedom I have to give up. And guess what? I really, really enjoy my life now. How much is that worth in dollars? Seneca said, "It is not the man who has too little, but the man who craves more that is poor." And I really am internalizing that mindset nowadays. I agree with this, guys. I mean, this guy's pretty much nuts on. He's basically going through the same time frame that I am. And I even when this enough stuff, I say the same thing. I'm like, maybe I should buy a new car. Maybe I should do this. And I'm like, nah, I'm good. And it just keeps coming back. I'm good. I'm good. I'm good. And then I completely agree. When enough comes with 100% time freedom, the time freedom is worth more than any of this crap. Having the time is where the value is at. Totally agree. So good work for him. Tyler Wright says life gets very fun at $200,000 in income. Why? Because you can spend a ton and still invest enough to retire early. Or you can sacrifice a ton and invest almost all and retire in 5 to 10 years, depending on market returns. Income is the answer. It's the hard way, but it's the answer. I agree. I think increasing your income by whatever means is an answer. It is. Now, it may not make you happy. The job that you do to increase your income might not make you happier in life. So, and I would say 200K is probably a pretty crucial point where you really start to pile money into the savings. So, income gives you optionality. Income gives you it gives you pathways that aren't available to others that don't make as much money. So, if you can almost combine what this guy's talking about with retire early guy, it's if you can find a setup that you can make money and increase your free time, if it's possible, and you continue to make more money, I would do it. One of the things that you can do to increase your income, and I can help you with this, is dividend income. Increase your dividend income and really launch it to the upside. You can do that in a retirement account where you don't get taxed, or you can do it in a taxable account to increase your income. I'm doing it in both accounts and in all my accounts. I'm increasing my income to give me more optionality. And I don't have to increase my working time for that income. So dividend income, and it snowballs. The first year, maybe you get it up to 10,000. Then you keep piling money into it, and you use the 10,000 to reinvest into dividends. Next year, 20K. Then you pile it back in. Now, if you are in commodity companies and their incomes are based off of a percent of cash flow and the commodity price doubles, then your dividend will double. And that is one thing that I don't think a lot of people think of. So if you're buying a company that is really, really low, they've cut their dividend way down. A lot of people will look at it and say, they cut the dividend back, I don't want to buy the company. But it's based off of the commodity price. So if the commodity price pulled back, but you think the commodity price is going to go way up, that's the best time to buy. It's when the dividend's been cut back and everyone's selling the company. And then when it goes back up and the commodity price comes back into favor, maybe we have another inflationary impulse move, your dividend will double, triple, quadruple based off of the margins of the company and the cash flows that they're getting. So imagine that you set up a commodity portfolio when the dividends are really low. You're getting a $15,000 dividend, and that dividend triples on you. So it goes up to, let's say, $45,000. That's a big chunk of money, and 45 grand probably covers the majority of the expenses that most people have. Something around, 40 to 60,000 is probably the majority of middle income expenses for people and families. So you basically cover your costs with the increase of that dividend. And guess what that means? More money to invest. That's and then you get that snowball effect. It says, how is it going? Net worth held by the top 0.1%. And you can see this just going up. But I will say, if you get inflation in the system and you just hold assets in general, this is going to be you. It's not just the 0.1%. It's people who have assets. And if there's inflation, the assets will go up. So regardless of who it is, you have to own assets. You don't own assets, you have nothing that's going up and gets indexed to the inflation. If you own a bunch of assets, they will go up over time. Over the course of human history, we've produced 700 million tons of copper. To reach net zero by 2050, we need to produce 1.4 billion tons of copper over the next 27 years, doubling all of human history production in less than 3 decades. A lot of people do not think this is possible. So the volume of 2050 net zero copper demand needs to double the production by 2050. And the majority of people who look at this say there's no way. There's no way. Not going to happen. This is True Wealth, The Psychology of Money by Morgan Housel. So let's read this real quick. The highest form of wealth is the ability to wake up every morning and say, I can do whatever I want today. People want to become wealthier to make them happier. Happiness is a complicated subject because everyone's different. But if there's a common denominator in happiness, a universal feel of joy, it's that people want to control their lives. The ability to do what they want, when they want, with who they want, for as long as they want, is priceless. It is the highest dividend money pays. I agree. And that's what I'm striving to do. Coming down. Coal is good. Natural gas is better. Nuclear is best. We must climb the ladder of energy density to improve people's lives and minimize environmental impact. Energy return on energy invested. So here's the EROI, energy return on energy invested, of different forms of energy production. Wind and solar, biomass, energy, coal-fired steam power, oil, gas, and then nuclear. We should be, as a society, moving towards nuclear from oil and gas. It's that simple. And guess what's going to happen? We will do that, period. We have to. We cannot go backwards on energy return on energy invested. It will cost more and it will create greater inflation from energy. We must move to nuclear with time. That's my opinion. Every day, the world consumes 4.2 billion gallons of oil every single day. That's pretty crazy. Imagine the hole inside of the earth that we're creating. Each year, we suck on all this oil. Coal is so bad at playing dead as it continues to increase with Asia Pacific countries in terms of its coal generation, electricity from coal generation. Continues to move up. Global fossil fuel consumption has hit all-time highs in 2023. There's absolutely no sign of this slowing down, never mind reversing anytime soon. And that's coal, natural gas, oil, all of it. That is what supports economic growth. And if economic growth declines, you've got a major issue with the way that the currency systems are designed. We must continue to grow if we want to keep our currencies the way they are and the way that they're designed. Art says tight oil production estimated at 9.15 million barrels per day in December 23, or 70% of U.S. output. Permian production will account for 6.1 million, or 47% of U.S. output and 68% of tight oil production. So we have a lot riding on the Permian Basin at this time. While macro folks are busy talking about growth slowing, the Baltic Dry Index just made a breakout. Got that right, baby. Baltic Dry Index looks fantastic, and it looks like an inverted head and shoulders to some degree. I would draw the line. You also have a downtrend line going this way. We have a breakout, a retest, and a move. When you have when you have millennials who have no net worth but good W-2 incomes, try to buy into a housing market where prices are set by boomers who have very high net worth and control supply. It looks like this. I think it can't last, but it can last. And this is the housing cost to income ratio. And we just have a shortage in housing, period. That's really all I'm going to say there. The shortage. Underappreciated achievements. No boss, no meetings, no schedule. No one needs to contact me urgently. No LinkedIn. Totally agree with that. Totally agree. It says, yep, never go again. Okay, so we've already talked about this one before. So I'm going to end it there, guys. So that's what I've got for today. We'll catch you guys later. My camera's having issues at this time. Looks like it's not coming up. But yeah, we'll talk to you guys later. Looks like everything's good on the commodity sector. And we'll catch you later. This is Finding Value.